every successful company started small. And so there's a lot of merit in investing in small companies and huge growth, obviously, with very long runways for that growth. Look, let me just say, take retail, for example. One of the surest ways of making money in the Australian stock market is to buy a successful retail concept that goes from half a dozen or a dozen stores to a footprint of a couple of hundred stores. It's stock prices have done historically very, very well when companies grow, and we know there's a very high correlation between growth and share prices. So if companies can grow their earnings from a very low base, which is typically easier to do than from a very high base, well, it makes investing in small caps pretty meaningful or important for people's portfolios. I know most viewers of this program will already, we're really preaching to the converted. There are a lot of people who are already investing in small caps. But I do think a lot of investors believe that they're riskier and focus probably a lot more of their portfolio on the large caps. But I think there's merit, particularly in Australia, investing in small caps. And remember that you hear all that research that says, particularly out of the United States, that says consistently fund managers don't beat their benchmarks or they don't beat the market. Well, in actual fact, the majority of small cap fund managers in Australia beat the small cap index. And they have a variety of techniques and ways of doing that. But identifying successful small businesses is part of the reason for their success. Within that universe of small cap companies, the benchmark is also invested in junior exploration businesses, junior mining exploration businesses, and they are really four white pegs in the ground and a very large dose of hope. So if you can find businesses that are better than those, you'll do very, very well in small caps in Australia.